How do you profit from supply and demand Forex trading? Building on the market mechanics we saw in the previous video, we can start to formulate a strategy to trade the market, but we need to start by asking the right questions. Who are using market orders and who are using limit orders? We know institutions and big players are the ones using limit orders. Remember that limit order users will accept their price and their price only. They're the passive party who we spoke about previously. The institutions with millions of dollars to execute aren't going to accept a broad range of prices and also risk slippage. They have more than enough knowledge and size to get their business done where they want. People using market orders, often in the form of stop losses, are usually going to be the retail trader or the weak hands. We learned that it can be easy to spot where these weaker traders are by simply examining where the supply and demand is. One thing that irritates me about some of the more conventional ways supply and demand trading is taught is the concept that it's simply where price moves quickly away from. And while that can be true, it misses the true dynamics behind how and why the market moves and where the other players are positioned. More on this in a minute. Taking the chart example from my previous video, we can build on the concepts learnt there. We need to find out where buying pressure has overcome selling pressure. Let's start by looking close to the current price. The most obvious place is here. Buying has been so aggressive at these prices that price has consistently found support there. We can add in a horizontal line to see it more clearly. But is that buying going to continue forever? Thinking about the market mechanism again, we know we've had plenty of buyers at point A. Now these buyers have bought, what do they become? Sellers. They become sellers who either need to get out for a profit or get out for a loss. If they got out for a profit, they've either left the marketplace or got back in for another bounce off of this so-called strong support level. There are the breakout traders who are waiting to sell beneath level A. There are the institutional players and strong hands who have huge orders to execute. They are very much aware of the amount of liquidity below the support. The buying pressure, which was previously demand, has now become supply. And that happens. All of the weak players have been stopped out and they've sold to the stronger party. But what happens if they weren't stopped out and they hung on, desperately hoping for the break-even trade? What happens if they've sold the breakout at A, looking for a huge move? Where is their pressure point? Where is the point where any long will give up? Where will the people who bought at point A throw in the towel? And most importantly, where is the supply and demand? It's staring us in the face. Weak traders bought at A. Weak traders hate losing and will do anything possible to get a break-even trade. Weak traders don't understand market dynamics. The supply is at A. Those buyers who are holding on for dear life, praying for a break-even, they're going to sell at A. The previous sellers who sold the breakout at A are also going to try scramble out for a break-even. Let's take advantage of those too. They're going to be buying very, very high up. The institutions and big players always know that this area was previously a fair price. They've seen the amount of business done there previously. Now we have moved to a new area of price discovery. Point A looks expensive. They're going to be selling high at A and buying lower down. The better traders know this and want to exploit the supply and demand dynamics of the market. That's what happened next. We see this time and time again in the marketplace. The effects of a few different elements coming together. We have the market mechanism and how price moves, the aggressive party needing the orders executed, such as stop losses. There are also the central supply and demand dynamics at play in the market, determining what price should be set at. We finally have the basic human emotion element of any market, the weak players who are always doing the wrong thing, and the people who are one step ahead of them and profit from their errors. But what does this mean for us? It means that we can profit from the supply and demand in the market. We can identify the pressure points ahead of time the areas where many different traders will need to make decisions, and we can hope to be one step ahead of them. And we can be on top of the market and the other participants. Which brings me to the end of this video on how to profit from supply and demand Forex trading. I hope you enjoyed it. There's going to be more content coming very soon. Don't forget to subscribe if you haven't already, and make sure to check out the blog at TradingProbability.com for lots more trading tips, tricks and advice.